We have Shikhar Aggarwal, Chairman of BLS E-Services, to come talk to us about their latest acquisition. It's, of course, a sports management company that you've acquired, Mr. Aggarwal. Talk us through, one, the rationale and what this adds to your bouquet.
Hi. In fact, actually, I think yesterday the acquisition that we have announced is a loan distribution company. So the company that we've acquired is called Aadifidelis Solutions. This company we acquired at an enterprise value of 190 crores, and we took a 57% ownership of this company, wherein we paid 78 crores. 25 crore was primary infusion into the company. Other money will be paid. The entire valuation of 123 crore will be paid depending on certain targets this financial year and next financial year. So this company has a very interesting model. They are into loan distribution. They process around 1,500 crores of loans every month. They have a network of more than 8,000 partners across India, wherein they source loans on behalf of banks and FIs and distribute those. And this company had a revenue of around 600 crores last year and an EBITDA of 20 crores. This year, definitely it is poised to grow. BLS E-Services already has a network of 1 lakh plus touch points across India. So we want to utilize our footfall of 7 lakh people to cross and upsell these loan products. So we definitely feel there will be a major upside for us, by this acquisition.
Point taken. You've acquired 57% of this company, Mr. Aggarwal. So a couple of questions here. First off, apologies on getting the sector wrong, but let me first off ask you on top line. So at 600 crore, where does the top line go from here? And at around 20 to 25 crore kind of EBITDA, if I heard that right, where does the margin number go as you grow over the next 2 to 3 years and scale this business?
See, this business, if you see last 3 years, 2-3 years before, they were doing 250 crores of revenue. Last year they did 530 crores, and last year they closed at 630 crores of revenue. This year we expect certain growth. EBITDA conventionally, if you see EBITDA margins, BLS E-Services, we do 15% EBITDA margin. This company, since it's a volume business, loan aggregation business, the margins are lesser. They did 20 crore EBITDA, but with our network, of 1 lakh touch points, they are currently only in 8,600 touch points across India, where this has become one of the largest loan distribution companies in India. We are thinking that we can really help grow this company. BLS E-Services last year did 30 crores of EBITDA, and then we did 45 crores. This last quarter itself, we did 14 crores. So we've seen major growth coming in. Now, when these numbers get combined, we'll get full quarter of, next full quarter, we'll get in the consolidation. And also next year, we see good growth coming in. So we feel that we can grow both BLS E-Services and Aadifidelis Loan Solutions through our network.
It's actually very interesting here, but if you could also give us an idea about BLS E-Services specifically going forward, the kind of traction that you're seeing in the second half of this financial year, what you're expecting, and how do the subsequent quarters look like as well?
If you see a growth in unconsolidated level, BLS International, we have grown 70% in terms of EBITDA in the last quarter. BLS E-Services has also grown, in terms of EBITDA by more than 20-30%. Now we are now increasing our presence across India. We have tied up with multiple newer banks. Bank of SBI was our major anchor bank. Then we started working with many other banks. Our reach has increased. So we feel the revenue and profitability from those services have started to come. Even private sector banks like HDFC, Access banks have started to work with us. So we feel BLS E-Services can sustain the growth momentum. And on top of that, this acquisition will definitely add fuel to the numbers.
Right, Shikhar. So where should the growth take your top line? I'm talking maybe the current entity itself. The acquired 57% will obviously add to your top line. So just trying to understand, get context.
I think definitely minimum growth that we are targeting is upwards of 20% in terms of top line and EBITDA growth that we do year on year, in BLS E-Services. But BLS International, we've achieved much more. So I think this company is also a new company. We started 5 years back. This got listed this year itself in January. So right now we're in the consolidation phase. So I feel that we can easily achieve 15-20% growth in terms of revenue and margins. And on top of that, the numbers that come in from this company will be further, to the numbers that we achieve.
Point taken. You suggested that margins are getting better, and you just told us that 20% growth on margin. So I want to try and understand are margins expected to get better as you scale on a 20% growth base, or have margins now flattened? Will they flatten at the mid-teen kind of level? Is that how one can expect it to be?
See, on a consolidated level, our margins have become 33% now, EBITDA margins, if you
Okay.
consolidate services and international. E-services, since it's a India-centric business, wherein you get paid in INR currency and it's a low ticket value, it's based on volumes. So definitely margins have been lower. We've been generating 15% margins. Now this company that we've acquired is a bigger volume base. Margins are slightly lower in this, but I think on the long term, we want to maintain the margins that we've achieved. As in BLS International, it took us a couple of years to grow the margin to upwards of 30% level. We feel even in BLS E-Services, right now 15%, we want to consolidate, in the short term, and then in the long term, definitely grow the margins.
So how much will that grow by? Sorry, Mr. Aggarwal, if I'm getting this wrong.
See, BLS International, we have grown to 30%
Correct.
above
Yes.
margin, where we are paid in dollars, pounds, etc.
Right.
This business, conventionally last 5 years, we were at 12%, 13%. We have reached at 15% EBITDA margins now. So definitely, and the company that we have acquired is at a little lower margin than what 15% we have. So I feel in the short term, probably margins can take a hit, but the profitability and revenue will grow. But in the long term, we want to maintain the 15% EBITDA margins.
Got it. And where does the 20% growth come from? Does it come more from government? Where are you trying to focus in with regard to your revenue growth? What segment?
See, BLS E-Services divided into multiple segments. Banking correspondent is where we work with banks, and governments is where we work with a lot of state governments for outsourcing work. So I feel that we are looking at growth in both the segments, wherein we are now increased our reach with different banks. More services have been added. We have given bigger reach. Banks now have consolidated. SBI has also given a kind of a verbal instruction that they want to work only with a handful of companies. They want to consolidate the market. I think that will play to our advantage. Even from an e-governance side, we've started working in the state of Gujarat, West Bengal, on top of UP, etc. So I feel growth will come from all the factors combined.
Okay, thank you so much, Mr. Aggarwal. Real pleasure speaking to you as always, and wishing you all the very best for H2.
Thank you so much.